Welcome back once again to the topic of published accounts, and we in our previous video would have looked at if we had to prepare a statement of changes in equity, how we would have gone about doing that, and more specifically looking at how our retained earnings would have changed. And then we put some fictitious numbers here for our appropriations or our transfers. I would have come up with the total amount that would have been appropriated out of the profit, and then would have given us our new profit to carry forward to the statement of changes in equity. To the statement of financial position. So just a reminder that these are all fictitious numbers. The only numbers here that are real are our net profit after taxation and our retained earnings brought down, which gives us our new retained earnings that we are going to carry forward into our statement of financial position in this video. So in this video, we are going to be looking at our statement of financial position. But before we get to the statement of financial position, remember I said that these statements are being prepared for external users, and you're just giving them external users some cumulative figures to look at in terms of your financial statements. But if you were preparing it for the internal users, you would have given more details so persons can see where the changes would have occurred, what was happening during the financial year. So the first thing in our statement of financial position that we look at would be our non-current assets, things such as land, delivery vehicles, and office machinery. So our land does not depreciate, so therefore we're going to put the $135,000 straight here for our land. However, our vehicles and our office machinery would have depreciated over the financial year, because you see they have accumulated depreciation here for vehicles of $16,400 and office machinery $21,850. And in the question, we were told that we had to calculate depreciation. So now what we're going to do, we're going to do another note, and we're going to do our calculation for our depreciation, our total depreciation for our non-current assets. And we are going to be looking not only just at the depreciation, but we are going to be looking at what the book value of those assets. So we are going to be calculating the book value figure for them. So this is our delivery vehicle. And delivery vehicles cost is $60,000. And then we are going to subtract our accumulated depreciation. And let's calculate that accumulated depreciation. We will start our depreciation is going to start with the $16,400 from before, and to that we're going to add the new depreciation that would have calculated on delivery vehicles, which is $3,000. So that's $3,000, which can give us total depreciation of $19,400. So then we're going to subtract the $19,400. So $60,000 minus $19,400 gives us a book value for our delivery vehicles. So here we have the book value for our delivery vehicles of $40,600. So we go to the statement of financial position. That's note 6, I think it is. And here we would say see note 6. And we'll put our $40,600. So the person will go to the notes to find how we worked out this $40,600 here. So then let's look at our office machinery. So office machinery, the cost is $85,200. less accumulated depreciation, and that would be $21,850 plus what we would have calculated for that. Depreciation on office machinery is $5,068 for the current year, so we're going to add that on. And that gives us total depreciation of $26,918, right? So then 85,200 minus 26,918 gives us a book value for our office machinery. This is a book value for office machinery of $58,282. So we go and add that in, and again we say same note, C note 6. So we will put here now our $58,282 that we would have calculated. So then we can add our non-current assets, which gives us $233,882. So then we can go on to our other information for our statement of financial position, like our inventory, etc. So remember, inventory will be the closing inventory figure that is given in the additional information. So inventory, $19,250. And what we need to look at now is our receivables. But with our receivables, we had to calculate an allowance for doubtful debt on that. So therefore, we will have, so then your accounts receivable minus your allowance for doubtful debt will give you your net receivables. So we won't do it here, we will do it as a note. So let's go to our note. So that would be note 7, net receivables will be our accounts receivable of $10,050. And then from that, we are going to subtract our allowance for doubtful debts that we would have calculated. So let's see what our allowance for doubtful debt was that we would have calculated. We would have found 4% of that $10,050, and that would have given us $402. So then we are going to subtract the $402 from that 10,000, and you will see what our net receivables will be. So 402. So 10,050 minus 402 gives us net receivables of 9,000. So this is our net receivables of 9,648. So we go to statement of financial position, and here we enter net accounts receivable of 9,648. Then we will continue with our other information for the statement of financial position, like our prepaid expenses. Now, when you come to do your prepaid expenses, if you had multiple prepaid expenses, you will not enter those separately. You would take all of your prepaid expenses and add them together and just call them prepayments. Right? But in this question, we don't have multiple prepayments. We just have one, which is the accountant discovered that the company's insurance was prepaid by $250. So we put in the one that we have. And the only other thing that we have to add there will be cash of $46.90. So we have cash $46.90. So we can just total here So we have our total current assets, and when we add that to our non-current assets, it gives us total assets of $267,720. So we go to our liabilities. We have accounts payable of $13,335. And we have bank, which is an overdraft. It's on the credit side of $1,380. And also in the question, we would have had accrued expenses. Now again, just like you have your just like if you had prepayments, if you have multiple accrued expenses, you will just add them together and just call it accruals. But we only have one, which is the office expenses of $315, so put that. And then we also have corporation taxes that were not paid, so corporation taxes payable, as what is owing, $3,270. We add those together. There are total current assets of $18,300. And then we have a non-current liability, which is our 6% bank loan. So you have your 6% bank loan of $40,000. We're going to add our current and non-current liabilities together, which give us total liabilities of $58,300. And then we're going to subtract that from our total assets. So $267,720 minus $58,300 gives us net assets of $209,420. So then we go to our finance base section, and then if you have your share capital, which is ordinary shares and preference shares, you would enter those. So we have a $2 ordinary share, so that's $175,000. So that is $2 ordinary share capital of $175,000. And our reserves, we are share premium of $8,000, and our retained earnings. And our retained earnings will not be just the $14,200, but our retained earnings will be $14,200 plus the tax, the profit that the company would have made of $12,220. And in our fictitious statement, we would have worked that out to be $26,420. So we can add that in, $26,420. Right. So then when we add our $175,000 plus our $34,420, now we have completed this total share capital and reserves. Right. So our we will say our statement of financial position balance at $209,420. And this completes our look at the statement of financial position for a company. So now you see how we go about doing our condensed version of the statement of financial position with respect to the statement of change in equity, the condensed with respect to the dividends and the proposed dividends, and our condensed version of our expenses, etc., and our trading section for the income statement, and all of our notes will be all working that we would have prepared. So that's it with respect to published accounts, and I trust that you would have learned something within these sessions, and we would want you to like these videos and subscribe to this channel.